Welcome back, my name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, this seems like a quarterly video that I have to make where one of the stocks that I own or is in my investable universe falls by 15-20%. ASML stock fell by roughly 17% in the past 5 days. If you're not following the stock, this is the company that is in charge of essentially all the technology in the world. And that is a little bit misleading because in the process of making a cake, of course, the blender is quite an important piece. But at the end of the day, there's many other items that go in the process of making the cake, such as the actual raw materials and whatnot. And so ASML is essentially that. They are the blender of the chip industry. They are the company that makes the machines that end up printing the chips. That's what they do. And this is a massive company, very important company, and in some cases, the only company in the world that is able to make these massive lithography machines. That's what they're called. And so it's just shy of $300 billion of market cap. And this is a company that is currently in my portfolio at about 5% weighting. And so they reported earnings. And actually, it was quite silly the way it came out. Apparently, it came out a day early, completely on accident. But anyways, the earnings came out and they were not great. And I mean, they were not great. The top and bottom line, that type of stuff, that was all fine. That came in expectation. But the number one reason that this stock sold off by far and away was they lowered their guidance for next year. And they lowered their guidance because of this one number here, the quarterly net booking, which came in at 2.6 billion euros compared to the 5.4 billion that was estimated for this quarter. This was by far the biggest reason why the stock sold off, why it continued to sell off today, why it's down roughly 22% from literally 2 days ago, right? This is the reason why essentially the sky came crashing down for it. And if you don't know what net bookings is, I went ahead and I got a explanation from FinChat's Copilot feature here. And long story short, this is essentially just the backlog of all the machines that they're expected to be selling in the next, call it, couple quarters, whatever the case may be. And so what FinChat's Copilot was able to tell us was gross bookings for ASML provide a snapshot of total value of the orders received for its products and services within a specific period. This metric is crucial for understanding the company's demand dynamics, market position, and future revenue potential. And that's kind of essentially what it is. It's the backlog of revenue that is expected in the coming however many quarters. Now, I'm not going to sit here and pretend like the net bookings number is something that isn't important or that we should ignore it, whatever the case is. That's not the case. In fact, the net bookings number, as we just saw in the FinChat Copilot, it's something that is instrumental to growth of the business. However, I would like to point to the fact that this is a hardware business with massive sales cycles because at the end of the day, there's only a handful of companies such as TSM, Samsung, and Intel that are even able to purchase these machines. This company, and particularly the net bookings KPI, is prone to massive cyclicality even on a quarterly basis. And to demonstrate that to you, I'd like to point to the net bookings KPI over time. As you might notice, in the past, just call it 4 or 5 years, there's been times where on a quarterly basis, you would see massive quarter-over-quarter declines by over 40-50%. And then this is particularly prolonged during this Q4 of 2019 to Q3 of 2020 period. Of course, we do have the pandemic in the middle here, but nonetheless, it does point to the fact that these revenues are cyclical, and this is something that is possible when it comes down to ASML. They have massive sales cycles, and if their customers are wary of the macro environment, they're going to hold back on purchasing new machines and all that. And additionally, if you flip this over annual view, you would notice in the past, give or take decade, there's been multiple years of flatline revenue, and then all of a sudden you have like literally a doubling or even more than a double of revenue. And then it's kind of flat for a couple years and then it doubles, right? So this is, again, I'm going to keep using this word, very cyclical business. This is just how it is, how the world works. When you're buying into ASML, you're buying into the cyclicality and you're able to ride the ups and downs. And today's gross bookings miss or whatever the case is, it's just a continuation of that. And actually, this shouldn't be something that we're worried about as investors because these things happen. And it's not like this is going to be staying at that level. We end up jumping back over Copilot feature. I asked it exactly like, what is going on with the gross bookings number? What did management say about it? And it's able to compile some information for us. It says Roger Dassin, this guy's the CFO or something like that. He says that there's a slow recovery in traditional end markets. Customers remain cautious in the current environment. Kind of what we were just talking about. Like if macro environment is a little bit weaker, a little bit more uncertain, they're going to hold off for a couple quarters, not buying the newest machines in that. Christopher Fouquet, which is this guy's the newest CEO, explained that the recovery will extend well into 2025, leading to customer cautiousness and some pushouts in the investments. This has resulted in an overall reduction of ASML's lithography demand compared to previous expectations. Dassin noted that due to the recent market dynamics, ASML now sees 2025 revenue move to the lower half of the previous guidance, 30 to 40 billion euros, with a significant reduction in expected low NA shipments. So a bunch of different things happen right there. Number one, customer cautiousness. This is like something that's very apparent. This would probably be in your top 3 customers that make up about 70-80% of the revenue. That's Intel, Samsung, and TSM. If those three guys are a little bit more cautious with getting the newest technology and all that type of stuff. That's going to lead to revenue stagnating. That's fine. We know that they'll eventually have to adopt this technology. They'll eventually have to pay up whatever price ASML says because they're the only town, right? This goes back to the chart I just showed you where the revenue randomly spikes up 100%. That's going to happen. Maybe it was expected to happen 2025. It might be delayed into 2026 or a couple quarters later, right? Not too big of a worry there. Second thing they mentioned, the low NA shipments, they're expecting a reduction in that. This also makes sense. Earlier in March, TSM actually said that they're going to try to delay the purchase of ASML's newest. They're too pricey. At the end of the day, they'll eventually have to adopt them, but they're just trying to delay it. And this kind of, like, if we're solving for the puzzle here, this kind of fits into the big puzzle. You know what I mean? On the other hand, what's important to note is that they're still going to ship the low NA lithography machines. It's just they're going to ship probably less of them. That probably means that they're going to ship most of them to Intel, which this again lines up with what we've heard from Intel, plastering it, and they recently took in the newest shipment of the first ever low NA lithography machine. So in summary, the gross booking miss, slower than expected recovery in the semis market, leading to customer cautiousness and delays in the investments, which has reduced ASML's expected lithography demand. All in all, and maybe I'm just too bullish on the stock, this doesn't sound that bad. This doesn't sound like we gotta wipe away 22% of the market cap in 2-3 days. You know what I mean? Like this is just how it is. This is how the company is. It's extremely cyclical. These type of things happen, but at the end of the day, they have to come back and eventually purchase it. This isn't like this revenue is permanently gone. This just means the revenue will come in a little bit later, a couple quarters later. Does that warrant 22% of the market cap just essentially overnight disappearing? Personally, I'm going to err on the side of no, that doesn't warrant the market cap. No, that doesn't really warrant that type of a sell-off. And so with that being said, where does that leave us? Where does that leave us with the ASML in terms of the valuation? And again, jumping over to the charting section of FinChat, we're able to pull up a bunch of different metrics. The number one thing that I personally want to look at is the forward PE ratio of this business. I personally bought all the way back here, September of 2023. This is the first time I purchased shares of ASML, and the stock in the ensuing, call it 6 months, quite literally doubled, not because of fundamental growth in the business, rather valuation of the business doubled. And I knew it was expensive, but I didn't sell it, whatever the case is. But you might notice, we're actually back. We are actually lower than where I purchased shares of this business initially. So the forward PE of the company currently sits at 23 times. And this is around where the bottom was in October of 2022, roughly 2 years ago. So the bottom of semiconductor winter was a comparable valuation to where the shares are today. Of course, take this PE ratio with a grain of salt because given the slower 2025 that's now expecting, granted, they did say that they're probably going to come in on the lower side of the guidance, but they didn't actually revise the guidance down. So keep that in mind. They still maintain $30 to $40 billion or billion euro revenue. They're just saying they're going to come in lower on that guidance. But at the end of the day, this should warrant forward EPS estimates to be revised. In that case, this 23 forward PE is probably a little bit, but nonetheless, point still stands. It's roughly around the decade low for this business. Like the low 20s PE is roughly the decade low. And both in July 2022 and in October 2022, it would have been a wonderful time to be purchasing shares of this business. One thing before we move on here, I know a lot of you are going to talk about, but look at the free cash flows. The price to free cash flow is like 90 something. Arya, don't you like to invest based on free cash flows? Unfortunately, free cash flows isn't really a great measure of valuation for ASML in particular. They have a lot of different working capital stuff that goes on and a lot of boom and bust capex and all that type of stuff. So because of that, you might notice that their free cash flow margin over time is prone to a couple years of being abnormally low. If we just take a average for the past 2 decades, give or take, this would probably be a little bit more accurate. If you're going to value it off of free cash flows, I would just optimize the free cash flows for roughly what you think it will be if the company running at optimized profitability, or your other option is just value it off share. That's what I like to personally do. So far, it's worked out pretty well. One last thing before we move on here, I just wanted to talk about China revenue. I saw a lot of people on Twitter talking about, well, look at ASML. Another reason, there's actually a lot more risks to it that people don't consider. 50% of this quarter's revenue was China revenue, the dangerous whatever. One thing you got to note with that is, first of all, we have just essentially a double whammy. One, we have customer cautiousness that they talked about. If those guys are holding back on buying, then that naturally drives up the percentage of China. And then number two, ASML is facing a lot of regulation starting 2025 that they no longer can ship certain machines into China. And so with that, they actually talked about this again in the earnings call. Ask the co-pilot is able to sift through and find it for you. And so this is exactly what they talk about in the earnings, they say ASML expects China sales to normalize to around 20% of their total revenue in 2025. This is a reduction from the higher China sales seen in 2023 and 2024, which were driven, and this is a key important part of this entire thing, which were driven by ASML working through a backlog of orders for China. Why would they be working through a backlog of orders? Because those orders could no longer filled starting 2025. And they expect that in the long term, China should only make up around 20% of the revenue. This is ASML management. I very strongly trust their work. They have a massive history of being trustworthy when it comes to this type of information. Also, if you're interested to actually try FinChat that we've been using kind of all video long, you could do so using the top link in the description. Completely free to try with full functionality and all that type of stuff. Again, that's the top link in the description down below. Now, when it comes to technicals, you guys might know I don't try to generally practice technical analysis and all that type of stuff, but I do believe there's some very basic TA that you could conduct that is somewhat indicative of like whether or not a stock is oversold in the short term. In general, I found that TA only really works for me when you're trying to initiate a position and trying to figure out whether short-term oversold and all that type of stuff. But this concept of like being able to swing trade and all that type of stuff, I don't really try to do that. I find that becomes a little bit more investors' psychology and all that type of stuff and a little bit more dangerous. Anyways, with that being said, I did this post and I did this exact same post for Salesforce. If you want to check it out, I'll link it in the description. But essentially, ASML is currently trading at 200-day weekly moving average. And so I went back and I manually checked since 2008, which is like kind of like the relevant history of this business. Pre-2008, they weren't really the same type of business, same dominant business that is. And so we've had technically only 3 examples where it went below the 200 weekly moving average. We did come very close to it 2 other times in December 2018, March 2020, and then October 2023 as well, but it didn't actually touch it. But anyways, if you bought it in 2010, a year later, your shares would have returned 40%. If you bought it in 2016, that would have been a 63% return a year later. And then I did the same thing. I did the same thing for 2018 and 2020. You would have earned 107% and 153% respectively. And it happened very recently, actually, in July of 2022. A year later, you would have had a positive 86% return. I think you guys are starting to get the point here. Every single time that ASML traded at close to below the 200 weekly moving average, past give or take 15 years, it would have been a wonderful capital allocation decision for you to be purchasing shares. You would have massively outperformed the market every single time this happened. Now, there's a first for everything. I'm not saying this is going to happen again, but the trend is in your favor. The fact that it's trading at a 23 forward PE and the fact that sell-off is essentially just for this business having a prolonged sales cycle and having these revenues coming a little bit later, considering all of those factors altogether, I think this is a fantastic opportunity to buy one of the widest moat businesses on earth at a bargain price. And so what am I going to be doing with my personal portfolio? I actually recently doubled my position in ASML. Before the sell-off, it was roughly trading at 30 forward PE, and I thought that was a fair price. It's came down even more. It's currently at a 23 PE. I would be more than happy to double this position. Currently, it's actually 5% of the portfolio, down a little bit, but I would be more than happy to double the position. It does take a couple days for my brokerage to settle the money with ACH. So once that settles, I'm probably going to be buying more of this business. I think it's a wonderful business, a very wide moat business, trading at an incredibly cheap valuation, even comparing to other businesses that I was recently buying, like Google. I was hammering the buy on Google, chuck the 4 PE on that. Currently, ASML sits at roughly a 23 PE. Google's at like 20.5, right? But of course, Actually, I guess Google is a monopoly as well. I just think ASML's hardware position in the lithography market, that's a more durable monopoly than like SERP. They're actually somewhat comparable because Google's a decent bit cyclical. ASML's pretty cyclical. They're both monopolies in their respective field. But anyways, you guys get, I was buying a lot of Google recently. Definitely be buying a lot more ASML. I would probably bump it up north of where MasterCard sits currently. Probably have it at roughly like a 10-12%-ish position, and maybe even add if it continues to dip. With that being said, thank you very much for watching. Be sure to check out FinChat. It's the top link in the description down below. And also, be sure to subscribe because it costs you nothing. Have a great day.